Hello, hello. Ryan, are you there?
Yeah, hello, mate. Just looking into
Good
this
morning,
issue.
everybody. TGIF. Ryan, there seems to be a problem with the chat.
Yeah, I'm just looking into it, mate. 2 secs.
Okay. All right, guys. So just a couple of seconds. Stelios, I can see you typing in the chat.
Yeah, morning, everyone. I'm not seeing any other people typing, bar us moderators, if you like. I don't know if there's an issue with
this is weird. Yeah, this is really weird.
Let me just ping Steve a message.
Yeah. I mean, worst case scenario, we do this without the chat enabled. But actually, Q&A, does that work? The Q&A works.
Yes, the Q&A works. The Q&A works. I see and typing, so that's yeah. Now David, Gavin. So now the Q&A is going to be the chat piece. But anyway, I mean.
Okay, so we got the Q&A. Okay.
Q&A.
Right.
I'll open that one.
We shall bat on through. We won't let adversity get us down. Friday Gremlins. Let's all go to the beach.
I actually don't know how. I don't know how to disable the chat, so that's why I don't know how to re-enable it. But it should be by default enabled for everybody. But I'm sure Steve will find a way.
Yeah, no worries. We can see you also. If you don't know and you're listening, there is a Q&A function rather than the chat function, and you can type your stuff in there and get that fixed for Monday. And if we can't, well, we'll just we'll go down the beach, as I say, call it a day. Right, let's bat on then. Welcome to Friday. Welcome everyone to the Flow Show. Good morning, obviously, Kate and Still. Hope you've had a good week so far this week. Plenty still to go, water to go under the bridge today. Right, let's start with a bit of data. Had Chinese GDP out overnight, looking a bit soggy. Worse than expected, coming in quarter on quarter down 2.6% versus 1.5% expected. From a price at 1.4%, quarter on quarter coming in 0.4, again a miss from 1% expected. Probably not unexpected that they were going to suffer from a bit of weakness, but obviously far worse than a lot of people thought. Given the lockdowns and coming out of some of the lockdowns, it might have been better. Perhaps it shows that there's still issues going on in China. Retail sales, on the other hand, were a bit better. Year on year, they came up 3.1%. They were year to date a little bit softer. Again, that probably tells a better story in what's been going on over there. We did hear this morning that another county in China has been locked down on 151 cases. So again, that is still bubbling under the surface, the COVID situation there. And they're also in the midst, apparently, of a big heat wave in a lot of provinces in China, which could be affecting crops, agriculture, things like that. So again, more pressure piling on to the Chinese economy and the people over there. Gold is cut their 2022 GDP forecast for China to 3.3% from 4%. That's going to be a theme I think we're going to be seeing, or are seeing, across most of the global countries as these recession fears keep bubbling to do with inflation and higher rates going around. Today's data, we'll look at that quickly, is going to be important. Actually, no, we'll finish off the chatter. One thing that we had, obviously, we had all these 100 basis point hike expectations jumping up yesterday, and they got a good torpedoing yesterday, particularly from Fed's Waller. Now he was a bit mixed in his message, because he said he would lean towards larger hikes, potentially larger than 75 basis points if the data performed. And he highlighted retail sales, today's retail sales, as one area he's looking at. We've got those later on, expected at 0.8% versus minus 3.3% prior. So that's his metric for whether he leans towards a larger hike, but his base case is 75 basis points. Now, we also had Bullard coming out as well. He is one of the most hawkish. He was the first to start pumping 75 pips or higher rates than everyone else. And he's pretty much ruled out 100 pip hike, preferably sticking to 75 pips. But there was a very interesting comment that our guy Five Magics in the chat room pulled up. His interview was with the Nikkei, and this is what he said when he was asked about the CPI reading. I think it sounds like the CPI report came in hotter than expected, although I just barely saw the numbers. But it sounds like both headline and core were higher than what financial markets were expecting. I think this ratifies the Fed strategy of moving expeditiously to neutral and beyond neutral as we move through this year. Now, this is a central banker of one of the biggest central banks in the world who hasn't seen the data, hasn't paid attention to the data. These guys are coming out and making these comments, and then they're not even watching the data. And it goes back further than that, you know, some of these guys are even talking about charts and levels and yield levels and curves. And what they were saying was completely different to what the actual market was doing. It doesn't give you a lot of faith that these clowns know what they're talking about, which has been proven really because they've been behind the curve on inflation and everything else for the last 18 months, and now they're still trying to get ahead of it. But that just goes to show how bonkers some of these central bankers are. But in the wider picture, what it's done is it's seen a big repricing of Fed expectations just between, you know, over the course of yesterday and the day before. I'll show you this quickly as well. This is the Fed probabilities. Now, yesterday, 100 pip hike was up at 54.2%. Now, this was in a bit later in the afternoon. It had been higher than that. A 75 pip hike was a probability of 45.8%. And now look how it's completely switched. This was the most probable action, 100 pip hike yesterday. Today, it's the least probable action, and now only a 39% chance. On the other side, 75 pips is now a 60% chance and the most probable rate action. This is what's causing the market to swing around. This is what's causing the dollar to swing around. This is why we have this volatility in FX markets and others at the moment. The market jumping around its expectations for, is it going to be 75? Is it going to be 100? And then below that, that's when we get in there. Is it going to be a recession? Is it going to be a soft landing, hard landing? All this sort of stuff. This is what is giving us the volatility. And in my opinion, this volatility is magic. It's fantastic. This is what we want when we're trading. As long as it's not too volatile, where you know you're going to get smashed out of trades and things are jumping 40, 50, 60 pips instantly, that can be a bit dangerous. But if you're relying on your levels, you're trading them appropriately, you take the volatility into account. You know, this is the sort of volatility we need. And I know a lot of people in our chat room yesterday was making some very good pips. There were some bad stories as well. You know, it's part and parcel, and you know we have to take a bit of humility when we're in something like a chat room, because you know you don't want to go crowing about winning trades when people are losing money. But I don't mind losing money to a certain aspect if I'm seeing people making money on the other side. There's nothing that gives me greater pleasure than making money myself than seeing people make good money. But not everyone can make money. People will lose money. You've got to get your chin up, get back on the horse, or take a breather. And you know, there's always another trade. And that's why I love a chat room, because you can sound out those thoughts with people. If you've had a bad day, you can talk to someone about it, get it off your chest, get the support you need, get the advice you need to get back on the saddle and crack on. So good volatility can be dangerous, but there are people here to help you if you're struggling with things like that. So anyway, we got this change around in the market expectations. And just quickly looking at the other data we got today, another big piece of data, not normally a big number, but in this context, it is a big number because the Michigan flash number for July comes out, consumer-led sentiment survey. Not a big one because it's only run on some 500 people via telephone. Quick phone call, several questions, and the answers are collated. But the big numbers here are going to be these inflation expectations. This is what Powell has put up as front and centre for his view of what inflation is going to be doing, whether it becomes anchored, de-anchored, what the consumer thinks about it, because that can drive trends in consumer spending, what people think prices are going to be doing. It can either cause them to front run or hold off spending. So these are going to be very important. 1 year inflation expectations and 5 year inflation expectations. If we see those dropping, that's going to take more heat out the 100 basis point hike calls. Depending if it drops really significantly, could take some heat out of the 75 pip Fed calls. That's the way the market's likely to trade it. Obviously, on the flip side, if these come in much hotter, the reverse happens. Those 100 pip calls are probably going to gain in popularity, and the 75s will drop. Personally, sitting here now, I don't think 100 pips are going to happen from the Fed unless this stuff really kicks off. I think 75 pips is what the Fed are going to do in their meeting in 2 weeks. I think the potential is there for the Fed to perhaps indicate that they might stick on this strong path for longer. So 75 pips might last longer, or they won't peel them back as quickly. And it could be that we start to see that they think rates may need to go higher than their current terminal rate, which at the top end is around 4%, I believe. They also may see that they may get longer before they hit their neutral rate, so they'll keep rates higher before they get down to their neutral rate. Lots of water to go under the bridge for this one, but right here sitting out, I don't think the Fed are going to go 100 pips. I think 75 pips is what we're going to get from them. So in the meantime, this sort of data is going to change the intraday expectations and shift yields around, things like that. Kay, what do you make of all the fun and games with rate expectations and the 100 pips stuff going on?
Good morning, everybody. TGIF. I actually bought a new ping pong table to trade the markets, because you can and you can actually go to each. It's a magic one because I can be on both sides at the same time, so I can like the market is repricing like crazy every day. I think really it's range trading. I'm with you. I don't think. Okay, Bank of Canada scared the markets, but I wouldn't think that the Fed is ready, or was at least ready to go 100 BPs. If we get both retail sales jumping and Michigan coming out hot, as you already said, Waller said he was going to watch retail sales and housing data. So we've got our first point of measurement today, and Powell hinted at the Michigan. So we could have some volatility again this afternoon. And in the meantime, my base case is still as well for 75. I think the rest is markets being very itchy, being very nervous about what could happen. What could happen down the road? Is it going to cause a deeper recession? Yes or no? So that they're constantly repricing everything. But for the time being, my base case is still 75 until the unless those two numbers this afternoon come out like way above expectations.
Yeah. What about you, Stel? What do you think? This changes the picture, if at all.
It's a tough one. I will tend to agree that 75 is the most probable scenario, but we had the Bank of Canada doing 100, and inflation is still high. And for me, the most important thing, we are not seeing in terms of equities and risk assets, we're not seeing panic moves. And as long as that happens, and as long as we're not crashing, and let's face it, the S&P is 20% from the lows. So it's in bear market territory, but it's been very orderly. So as long as this happens, the door for 100 is going to be wide open. And, if you put a gun to my head, I think they do 75, but I think the chance of 100 is bigger than people think. And, they might want to front load it. I mean, I don't know, it's anyone's guess now, and it's going to be up to, and to me, it looks a little bit silly that a couple of numbers coming up today could shift between a 75 and 100. It's a couple of especially retail sales number is quite a volatile one. So should they influence the decision? Yes, but not as much as, who was it, Bullard, who said that he's going to be looking at those numbers?
Waller.
Okay, yeah, sorry. So
Stadler and Waldorf. So Waldorf is Waller and Stadler is Bullard.
Yeah. So if you ask me, I think they're doing 75, but the pace should remain unabated, unless we see a risk-off situation, a pretty decent risk-off move. And on the flip side, you have the dollar, which is strengthened massively, and we all know that the world cannot afford the strong dollar for too long. That's a given. Emerging markets are going to have huge issues with that, and everybody knows it. The Fed knows it. And when you are the reserve currency of the world, you have a responsibility. And you just can't allow, they just can't allow it to strengthen so much so quickly against everything. So it's a balancing act, and the Fed will be aware of that. So for all these reasons, I think they're going to do 75, but they could easily just say, screw it, we're going to go full speed, take rates to 3-4% as quickly as we can, and then we reassess. But
Stelios, for the sake of argument, and I know, and we all know, those who have been in the markets for a while, how a very strong dollar is putting pressure on emerging markets because they have so much dollar debt, right?
Yes.
For the sake of argument, though, I will say that from when Powell or let's say the Fed has started to change their rhetoric, which was about May, June of last year, and even before, they did send enough messages to everybody to go as long as possible for in the maturities how shall I say, to handle their debt, right? And some countries have been clever enough, and they were doing up to 20-30 years, where they usually do much shorter maturities. So for the sake of the emerging markets and the dollar debt, I hope they listened to those messages and did restructure their debt to much longer maturities. I know a lot more dollar debt has been put on when the rates were at zero. But just for the sake of argument, if they're now in the shit, it's a little bit of their own making, right?
You're absolutely right. And if when the Fed was actually starting to tell us this is what's going to happen, the right thing to do is to hedge, to actually restructure and trying to control your risk. But you know very well that I'm guessing a small, only a small subsample of the US denominated debt was done in that way. So, the risk is still there. And I still think, the dollar, the more it strengthens, the more it's going to choke, emerging markets. That's always happened. Always.
Yeah.
Unless the economy holds up. Unless the economic data really hold up. I think that's so you have CPI on the one side, and then you have the real economic data coming out on the other side. And that's also the reason why you were saying as well that some assets are not collapsing, like equities and stuff, because the data up to now are not supporting a big recession, right? So and if the data hold up, the emerging market currencies or countries may swim through all of this, but of course we will have to wait a bit further down the line.
Yeah, agreed with both your points there. I think it's just looking back at this week, I think if I had to pick one event that was the highlight of the week, and probably maybe for quite some time, possibly years, is the Bank of Canada going at 100 pips. I mean, this is a G7 economy here. It's pretty much unprecedented for central banks to move 75 pips, let alone 100 pips, unless there's some sort of emergency going on. So this thing is, I mean, this opened the door pretty much for the Fed. I mean, everyone was hawkish on the Fed. 75 pips is hawkish enough as it is, but this opened the door for the Fed, and it's created such a big thing now. I don't know if we'll see moves like this ever again. This, history in the making, but it really set the wheels in motion for this next phase of Fed expectations running. And it shouldn't be underestimated the scale of this sort of move that we've seen from them, and the waves it can cause, the whole way down the line. I don't think we even moved this big when they were cutting rates over the GFC and the virus. It was all going in 50s, wasn't it, Kay?
I think there was 175 that US cut, right?
When they're cutting, they are always very fast. This is the fastest in a very long time. I think since the 80s or so, or the 70s perhaps, to raise in that manner. I just hope that the ECB heard the call as well. Because if they only do 25, I don't know what's going to happen to the euro next week.
Yeah, they might go 35 pips, Kay.
They do 25 is like cutting, basically. I was going to say I've been trading rates since late 2001, and I've never seen hikes like this. And this, you're right. You have to go back to the 70s and 80s.
Yeah.
But on the other hand, we have never seen inflation jump this high this quickly. Since the 70s, 80s.
Absolutely.
So it kind of what gets me is that we've been talking about it here on the webinars and on the chat room and everything about how, from the beginning, how quickly they need to go. They're behind the curve. Come on, and they weren't doing nothing. And now they're trying to do 75s and 100s. Well, it's a bit late now. You're obviously you need them. But what if you'd done that 6, 9, 12 months ago?
Yeah,
that's
exactly.
a question. But what if? Harry hindsight.
Harry knows a lot, Harry. Absolutely.
But in fairness, the guys and girls in the chat room have been trading this for this situation to happen, for a year or so. I certainly was, but I never expected it to go this far. It's been a shocker, really. I was expecting maybe inflation to get to 5-6% at tops, but we're heading for the 10s around the world. It's bonkers stuff. Yeah. But anyway, let's get.
That's what I was saying when this pandemic started, and I was saying that in those days in Forex Flow, and I said we are really in an extremely accelerated economic cycle. Actually, we've done like a cycle or a cycle and a half in the space of 2.5 years, where normally an economic cycle takes 7 or 8 years to develop. Now we have done it in 2 years, basically, right?
Yeah. Just seeing a comment out on the wires from Suzuki saying that rapid moves are seen in FX markets, and they're watching market moves with a high sense of urgency. Is that a change? Saying that rapid moves are being seen?
That's the intermediate step, probably. An intermediate step.
You have to correct me. I think prior comments were that they were watching for rapid moves, and this is now rapid moves are being seen. So I don't know if that's correct me if I'm wrong. If that's a slight change in metric, as you say, a step up.
Yeah, it's a slight one. It's a slight one, but here it says concerned about recent rapid yen weakening. Okay, that's kicking in an open door. But the one thing, and I don't know whether they would still use this kind of rhetoric, is to say if they identify speculation, and that might be the step just beyond the one that we are seeing now. Okay,
so just be aware that's popping out on the wires as we speak here, Suzuki, on the wires. There's no real move in dollar yen on those comments, but as I say, I think that's a little tiny step higher up the ladder towards intervention. Just that comment on seeing.
Yeah, he is adding lines because now he says he will respond to FX market as appropriate through close communications with FX authorities from other countries. So basically, meaning the US. So yeah, it's a little step up again.
Okay, keep an eye on dollar yen here. I don't think I'm going to hit that headline with a short. Let's see. Maybe the market's a bit behind the curve on that one. Anyway, right, let's crack on. I'll keep half an eye on dollar yen, trading at 138.72, 73s. Euro dollar, still this big story at the parity level. Had the flush, we got the flush. I was jobbing longs off of the level.
Oh, here we go.
Prior to that, then I had my stop reverses in.
What's happening, Cayman?
Ryan, sorry to interrupt, but he says speculative moves are seen in FX market. So that to me is close to the final step before we could expect interventions if tradition is respected. I'm having
a little sell at that.
This is possibly a relatively important line. So I'm not going to sell on it, but if we see a jump now on people trying to test the Bank of Japan, it might be time to give it a small try.
Yeah, I've had a sell of it. I've sold at 70. I'm going to give it a go on that headline. That's the one we've been waiting for. You know, we've been pumping that for quite a while as what it's going to be stepping up. So that's 2 comments now that he's stepped up. Okay, I'll give that a little go. I'll keep an eye on that while we're talking. Yeah, dollar yen. See, little move there on that comment. Let's see what it does. But anyway, going back to the parity story. So we had the break. It finally tipped. The sellers got their wish. They broke it down, but we couldn't hold it. And really, Waller coming out, really sent the screws and turned it right back higher again. So as I say, I got out a little bit of the sell stop in the 60s. But I got stopped out on the rest as it bounced up through at 15 above here. We did get a little nudge below. So what I would have expected to see is that coming in as support again. But we did get a little late nudge below. We're back above today. I was bid at 05 when we were moving down here because I just had a bit of a feeling this morning that perhaps the euro was going to potentially move higher. I missed out on a bid by a couple of pips there. We are pushing up. I think from here, the one level becomes a bit of a support point again. There may still be an opportunity to grab along into that level if we get the data strong out the US. This will be a key for me because we've got the ECB next week. Potentially the market is not going to push the envelope until we get over that risk event. So it could see that we find euro dollar consolidating down here. What I'm going to look for is if the data is strong and we test but can't break that parity level, I'm going to probably jump in. If we do break it, I'm going to see how long that break lasts and whether it lasts. And if it doesn't last long and we quickly get above it, I might jump in on that move because I feel like being long euros right now rather than short. But I'll trade the price action and we'll see where it goes. I think it's obviously come a long way. We're still at a big level. We've had a go at the big level. We haven't held below the big level. The price action, in my mind, tots up that this might head a bit higher than we are now. So that's what I'm looking for from the data. You two, got any thoughts on the euro?
No, really. I think what I was saying in the chat room this morning as well, it looks like in a good few assets or currencies, it was like the kind or an intermediate or a final get me out of here move yesterday, because we've seen like commodities coming off, copper selling off, Aussie despite better labor reports selling off, euro selling off, and then it started to stabilize really around relatively the next important level. Aussie around the 66.80, cable stopped in the 117s, and the euro just sub parity, where 99 is a very big level. So we could be in for a bit of a correction, or for a while, or stabilization, sideways possible, before we attack. In my opinion, the next 2 weeks will be important, because we do have the ECB, we do have the gas Nord Stream restarting or not, and then we have the Fed later on. But for the euro, I really expect next week Thursday to be an absolute monster day. But okay, we have been saying that a lot of times. Sometimes it's not happening, but we have seen pretty decent moves of late. But I think the next decisive move may have to wait until next Thursday.
Yeah, agree. Still, you got any thoughts on the euro here?
I tend to agree with Cayman. What worries me is that the political situation in Europe is now worsening. You're seeing with Italy. Oh, come on, I forgot his name now. Draghi, yeah, come on. I was thinking about Matteo Renzi for some reason. Anyway, Draghi wanted to quit, basically to resign, and he wasn't allowed by the president. So it's like it's very delicate. And a friend of mine I've been discussing with a friend of mine about France as well, and he's saying, and he's a very sharp guy, saying I think far right governments in Europe are coming. And I'm like, that happens, then I think we're going to see I've always said that I think the euro is a very difficult experiment, and trying to join all these countries into the same currency, which are very different countries, the way they run, everything about them is very difficult. And I've always said that I think in the long run, the euro will probably disappear. It will probably get dismantled or something. If we do get right-wing, far-right governments, I think that's going to bring that situation forward in time, and it's scary. It's scary for Europe and the euro. So if you ask me in the very short term, I think that the ECB has to kind of catch up with the Fed and with the other central banks, because let's face it, 8% inflation roughly in both the US and the Fed and the ECB in the eurozone, and the US is hiking 75s and maybe 100, and the ECB is sitting there scratching their head. So they absolutely have to get more hawkish, because they have one mandate. It's criminal what they're doing. So I think at some point, and probably sooner rather than later, they're gonna step up a little bit, even though Lagarde really does not want to. And that's why I think in the short term, things are really stretched against the euro, and we're going to see a little rubber band effect the other way. But in the medium term, I really fear for the euro. Not that I think that the dollar is going to be doing well. I think the dollar is going to be in a decline for a few years going forward. But I'm talking about now further in the future.
Yeah.
People don't really care about
it. And my view on being long the euro is purely really short term, just on the price action around this. But I agree with it. I don't still see a reason why you'd buy the euro for a longer term trade, particularly against the dollar at the moment. But bottoms and lows, they start somewhere. So if we are to see a bottom and the euro tick high, it's got to start breaking some of these upside levels. And at the moment, take this week, it can't even break the minor levels and hold them. So there's no reason to change the trend at the moment anyway. And I'm still playing euro longs versus the pound. That was my preferred measure of euro this year. If euro dollar wasn't looking too hot, so I'm happy to stay long there, because as we can see, it's not doing an awful lot. Is old euro sterling still trading between there?
I agree with you, and you can imagine what happens when the euro dollar starts ticking up. The euro pound's gonna tick up even faster, I think.
Yeah, exactly. Just for good order's sake, I got out that dollar yen for -7 There's no follow through on that headline, and when I'm trading headlines like that, I want to see an instant reaction. If I don't see an instant reaction, that means it's not working. So I folded that in for -7, just in case anyone was following or doing the same.
I was looking while you were talking about this the euro sterling. I was looking at a 1 week put dollar yen, but even the 1 week vols are above 14%. It's close to 15% actually. It's just around 14% for the at-the-monies, but a 137 1 week put costs about 50 pips, which is for a 1 week really very expensive. But I might be looking at something, you know. I think especially if we get good numbers and the market starts to ram dollar yen higher again, then we might be extremely close. I'm not saying we are going to see an intervention on a Friday, but who knows? There's going to be risk now on every big figure or so that this thing goes up.
Yeah, I think you're right. I think it's worth maybe starting again to look at the short side for dollar yen. You know, this looked pretty significant yesterday. You know, we had the initial run up, had a high around that 139.40, had a decent pullback, got a rally back to that high, held again. So this is the price action I look for. You know, where are the tops going to start getting confirmed? You know, we can all try and guess a top, but I like to let the price action produce the evidence as to why this level. Or if this level is going to become one. At the moment, it's looking like it might become one, be it short term or otherwise. Further down, just above 139, it's starting to look a bit resistive here, around there. So again, that's your first line of defence before we have a look at 139.40. But again, just like euro dollar and parity, I'm going to be watching the US numbers, and if we get a move up towards here again and it holds, can't break it, I'm going to be thinking about shorts into that area, and let's see what we go. And I potentially would be happy to hold those over the weekend, actually, given those comments coming out. I think Kay's spot on. You know, when you get, we've been looking for this change in rhetoric from Suzuki, and this is a change in rhetoric, whether the market's believing it or not. And I think moving forward, Kay's right. It just changes the picture, maybe from dip buying to rally selling. But let the price action tell you the story. If we break 139.40, we're obviously not done. And so I'll be wrong, and we go back to sitting and watching again. Kay, do you want to do your round robin?
Yeah, sure, no problem. Let me just up. Yeah, hold on. Here we go. Yes.
Okay, let me.
Guys, I gotta jump. I'll see you in the chat room. Okay.
Yeah, see you later, Stel. Thanks.
Take care, guys.
Thank you, mate.
While Kay's setting up, just for any latecomers into the show, yes, the chat function isn't working for some reason, but what you can do is go into the Q&A function and put any comments and questions in there, and we're monitoring that today. So apologies for that, but use the Q&A. Okay.
The first one I'll be looking at is these gold and the metals, right? It's looking it doesn't look very nice. To me, really, we need to for a starter go back above 23, 25 in gold. If not, we are in for a test of this 1670, 1680 zone. We really need to create room on the top side to start to get going again, which could be driven actually by economic data holding up better with high inflation. But we have to be a little bit careful about those rate hikes. To me, really, and now it's starting to get a little bit further away. We need to get back above 50, 55, and especially 70, 75 on gold to really give us room to move higher. Silver, I tried this one yesterday, as I said, just inside this 55, 70 zone. I let them go at 45, took a 20-cent loss on a small one. I've rebought a small one this morning because I'm still of the longer term view that I want to have something in it on these moves lower. But again, as I was saying already a couple of times and in the room as well again this morning, I am nowhere near full position. I want to leave myself room to add to this in even another buck lower. So I'm really having like very smalls in it right now. And if I start to see moves back above 1870, 75, and above this 18.75 really, I'm going to get a little bit more positive, and then back through 1915, I may press a few buttons to buy even more if we would not get an extra move lower. Give me just a sec because I want to close. I'm closing my the leftovers of my dollar Canada long here. I don't know. It seems like the dollar is a little under pressure. I'm not sure whether I want to hold anything. It's been a fun ride. I've been jobbing it up and down, and I've made made a pretty decent penny on this dollar CAD. But there was this extra line yesterday, which DK Trader in the room also highlighted, which could put us somewhere closer to 132.25. So I went flat there yesterday, reloaded on the 130 figure, resold at 130.30 this morning, and now I'm like just covering the last little bit. It's Friday and we got numbers this afternoon. So watch this 130.80.85 for a starter because it was a triple quadruple top on the dollar Canada. If we start to get below, I suspect we get some short-term stops. People trying to buy the break kicking off. We may at 129.5 is a bit far away. This is a daily chart, but we may get a move down back to 130.25. Why not? Bank of Canada has raised 100 BPs after all. If we close the week above, and I would say well above, don't think 130.90 is a really strong close. But if let's say we close the week above 131, there may be more to come next week again. That'll depend on this afternoon's data as well in the States, I reckon. Another one, which was an interesting one yesterday, was the Aussie dollar. We did move down. I had this 66.80 pen down yesterday, and I was talking about it with Blake as well on our chat, and I said like this may just be enough for the time being in the Aussie. Yes, we failed at the 67.5, 67.60 zone, but the move lower, as I was saying already earlier, felt a little bit like the last get me out of here move. And so yeah, we stabilized, we went back up, and then it was trying to get back above this 67.60 zone. The Chinese data came out, and the Aussie got smacked again for 50 points. But it's slowly but surely crawling up again. So a close above the 67.60 this week, I think, may be viewed by a few as being a positive and a fake break of the week's trading. And we can have it in a few ones. The dollar Canada could be the same. Okay, we had a pretty violent move up to 132.25, but the return now, we are back, and we have done 140 points back down. It's all in this ping pong framework of what I've been talking about, and the market constantly repricing whatever they can. The market is very nervous, very nervous. So this is the dollar mix then. pretty much like similar kind of moves broken above the triangle. This one is going to be our big zone of support later on if we get back down there around the 2058, 2060, and then we have another one just above there, 66, 68, where the latest retracement held. It's going to need a close above 2090, 92, 95, even in my opinion above 21 to really say that to say that dollar mex is off to the races. I don't have anything in there. I'm a little bit cautious on the dollar side. Yeah, I'm a little bit cautious in here. I don't like to trade it in between those goalposts for now. The other one, which is making me be very patient again, is the Euromex. I'm still small short. I'm hoping for moves back above to the 2110, 2130 zone to add again. But for the time being, we can't make it above 21, which is around here. It doesn't go lower anymore because the people are starting to try and build some form of stability in the euro. We have those uncertainties for next week. We have uncertainties on yield curves. As Stellas was already mentioning, the dollar rates are putting a bit of caution on the emerging markets as well. So we're in a bit of a holding pattern here, and we wait to see what happens. As I was saying, if I get a weekly close and a reopening the next week sub 2080, I might be pressing a few buttons because I still think that ultimately we're going to have a revisit of 20 the big figure in the Euromex. What else? Is there anything else you wanted to look at, Ryan? Because I haven't seen. Yeah, Brian. I mean, the 130.80 will be broken, and we don't know. We will see. You know, it's 8 pips away. We will see if it's breaking or not. Anything else?
Nothing from me. I can't see anything in the chat. Just once again, if you do want to chat, the usual function isn't working, so please jump into the Q&A function, which should be at the bottom of your screen if you see the same screen as I do, and you can ask the questions in there. Yeah, that dollar CAD is important down on the 130.80. I'm still long from 90 on a reverse. Fortunate enough to get out some in the 132s. But I've got my stop on that currently at 130.75. I'm just looking to see if this 80.85 holds up and becomes decent support. But yeah, you're looking at stocks there, Kay?
Yeah, I'm just looking at S&P 500. Okay. People in the room have been really trading it well. I've been really trading this ping pong well. But I'm a little. For me, we're in this triangle, bit of support here. Had a false break under there. Then we came onto this next support. I think it's stable. It's really stable for me. From the more, if you look at it from a little bit more distance, to me it's pretty stable right now, and we are waiting for the next set of data, set of likely central bank decisions to really start to move again. 38.30 for me is a bit of a level on the top side in the S&P. It's also a fib level. Get back below 37.70, 37.55. Yeah, this 45.55, which has been highlighted as well by people in our room. And then I think 37.25, if it goes back below there, it's may mean bad news for this one.
Yeah. Have we got more earnings today? Have we got more earnings today?
Yeah. The earnings are in full swing, and now so we've got more earnings today. I haven't really seen the calendar of what exactly will. Let me have a quick look on that one.
Because that I think is what tipped the price below that 37.50 area. Those earnings.
Yeah, JP, because the first bank earnings were a little bit average. it ticked it below, but then on the other side, the market is also was trying to look at it from a really bad angle, or the being worse and worse. But it was average, but not really the catastrophic data that we have, that some people at least were expecting. So today we have Citi, we have BlackRock, we have Wells Fargo.
It's just out, actually.
Sorry?
BlackRock's just out. Gavin's just put it up.
Okay.
Missy's there as well. See, people are going to look at that BlackRock numbers, and Gavin's put them up in the Q&A. Yeah, they're misses, but they're still decent numbers. Revenues 4.53 billion. That doesn't scream recession, and doesn't scream that markets or investors are pulling money out and not trading. So although it's a miss and the market moves on misses, the same with JP Morgan, that the numbers were still pretty decent, even if they didn't match expectations. But anyway, thanks for that, Gavin. And I think you've probably seen that comment.
Eurocad.
Yeah, Lucas wants the Eurocad, and Cannon Black wants Euro Aussie, if you can, mate, as well.
Sure. So the Eurocad, as everybody knows, I've been trading this one pretty aggressively when it broke 134. We're a bit in the middle of the ballpark, and I said to the people that 129.90 was a support on the more longer term. We had this quick blip below on the Bank of Canada, but then that was clearly a false break, and now we are like trying to correct inside this inside the extremes. We did go back up to 131.90, which in my opinion I've highlighted that level as well on the way down to be an important one for me. So we've gone bang there again, and then a bit lower. This 131, let's call it 30-40 is a bit of an intermediate pivot perhaps, but I'm not really looking to trade it right now because I've got a lot of question marks about what is going to happen next Thursday, ECB and the Nord Stream issue. If both are negative, I think we crashed through 130, and the euro will be under a lot of pain. Call ECB 25, not signaling. Well, I mean, they might even signal something for the next meeting, but they will be so far behind the other central banks. And imagine that Russia goes like, well, turbines, yes or no, but we don't reopen the taps as you would like. Euro is really going to get hammered, in my opinion. So I'm a little bit reluctant. Might try just to trade it off this one for a little go, and then see if that caps, and then play the 50 pips, the 50 to 100 points. 133.25 is a small level as well. So
by the way, ECB's REN's just been out saying likely ECB raises by 25 in July and 50 in Sep. So don't bother talking 75 pips with them lot.
Oh my God! Even Ren, and he was a hawk.
Yeah.
I mean, why? Yeah. I mean, this is crazy. As Stelios was saying, this is criminal. Yeah. But I mean, no, that would be crazy, because I've been really changing and thinking ECB might really do 50 next week, because the window has never been open like this before, and they really have to. I wouldn't understand a 25 BP really right here and now. Okay,
it's an open goal, isn't it? Let alone a window. It's an open goal for them to get policy back up.
Exactly. I mean, it would be really crazy if they only do 25, in my opinion. Okay, Euro Aussie. Yeah, this Euro Aussie has been on the move lately as well. I'd be tempted to say that if nothing else changes in the euro, in my heart and soul, I'm still a euro seller on rallies. but I want to be a little cautious these days. But yeah, I think Euro Aussie, it's broken, right? It's broken the longer term or the medium term trend line when it went through 150 basically, and since then we've been like struggling to get anywhere near. I'd say 148.60, 148, 149 the figure, but I'd rather call it around this 149.25. I can see some resistance, and looking at prior spikes, there might be some interest around there, and then watch 148.60. And there's some really short-term stuff going on around 148.10.15 as well. But to me, the bigger zone here is the one where we held is going to be 147.60.80. I've always kept a close eye on this zone. Get a confirmation through 147.30. We might be on our way to back down to 146. The figure basically. That's how I view this one. Anything else?
No, I'm.
Yeah, I'm looking at the time. Maybe we should.
Yeah, it's good stuff today. We had having some live headlines popping up, some potentially live market changing headlines. It's why we do it. It's why we watch it. This sort of stuff comes up. I'm getting an itch to get back in a little short in dollar yen. You know.
I'm not gonna lie. I sold a small there as well. I sold a small actually. It's what I'm out of experience. What I've been seeing, that this is really somewhere the last line of. If there might be one more step, which is we confirm that there is speculation in the market, but then that might not even come. The next one should be checking rates, and then we get interventions. But putting a time on it is a bit difficult.
Yeah, I think we need to see a bit more stronger comments on the speculation stuff. For me, and
but as I was saying, I mean, as soon as they will check rates, if you see dollar yen dump 50 points without anything, they're probably calling up and checking rates.
Yeah, okay.
But then it should as quickly rebound if they don't do anything. But we are close. I think we are getting closer now. Yeah,
and we're right near that 140 pretty much. So keep an eye on that. If we break above there, that could be, as Casey mentioned, in the trigger point. Anyway, let's call it a day there. I want to get back to my trading screens and see what's going on. Thank you very much, everybody, for coming to the Flow Show. I hope we've given you some good guiding advice, ideas, news, that sort of thing. Stay safe for the rest of the day. Look at the data. Let's see what happens. Watch those levels. As I say, if we can't break some of these levels that have now been set, highs and lows, euro, dollar yen, dollar CAD, then you know where you can lean your risk against. Thank you very much. Thanks to Kay Stelios. Have a great weekend, everybody. We'll see you bright and breezy on Monday.
Have a nice weekend.